But let's put the spotlight on Ujjivan Financial Services. They saw a weak third quarter in terms of their results. Profit fell 33%, but on a positive note, provisioning also saw some let off. It fell 67% if we compare it year on year. Discuss these numbers further. We're now joined by Sudha Suresh, Managing Director and CEO at Ujjivan Financial. Ma'am, thanks so much for joining in. Very good to have you on the show. You know, it was a weak quarter if we look at it year on year, but sequentially you've seen a number of improvements in quite a few parameters. Your profit after tax has, of course, reduced 33% if you look at it year on year. Just help us understand sequentially where you saw the improvement this time.
Okay, so good morning, and when you see your perspective year on year, you're speaking about a weak quarter, but probably one needs to share that the quarter that when you compare year on year is a healthy, robust quarter which had not got the impact of demonetization. So one needs to look at the perspective from the last 3 to 4 quarters as to how we performed right from March, June and September 2017, which bore the brunt of demonetization. So from that aspect, if you see, in fact, in the first 2 quarters of this fiscal year, we had posted losses significantly because of the credit cost hit that we had taken, and which was the impact of demonetization. Compared to that, we would like to indicate that this has been an excellent quarter for us because we have posted a net profit with a robust growth in our disbursements, portfolio, across segments, and overall this has been a very good quarter for us.
All right.
And essentially this comes from the fact that there has been robust growth in disbursements. We disbursed about 2,134 crores, which is almost a 28% over year on year.
That's right. In fact, I wanted to come to disbursements. You've seen this 28% uptick as far as disbursements go. Could you just help us, break that up for us in terms of where you really saw traction this time in terms of disbursements?
So we saw the traction across all the segments. In fact, right from the microfinance loans, the group lending that we have, the MSE and the housing, which saw a significant jump. So if you were to just compare with the last quarter, the MSE and the housing put together formed about 4.3% of the total portfolio. But we saw a significant jump, which is in this quarter, where we saw these two contributing about 5.5% of the total portfolio. Also, the microfinance business, which had sort of returned back to normalcy by the September quarter, saw robust disbursements across the last quarter, all the 3 months. So overall, we would like to indicate that now business are more than back to normal levels, and we would probably see this trend of growth in disbursements quarter on quarter, and definitely we would be moving towards the kind of guidance that we've always had, 18 to 20% growth in this financial year, and also 25 to 30% growth that we look at in the next financial year.
All right, so that's the guidance in terms of disbursement growth going ahead. And like you said, you saw this MSE and affordable housing contributing more than you have in the past. But microfinance group loans continues to be the lion's share. It's about 85% of your gross loan book, if I'm not mistaken. Just give us some color in terms of what these loans are. Where are the geographies where you're seeing the most amount of traction? And what is the average ticket size?
Okay, so the microfinance business continues to be a robust business for us, contributing more than 85%, and we are spread across 24 states in 209 districts, and as we do our conversion to bank branches also, we are way ahead with almost about 121 branches converted so far. So we have attraction across the country, and we have geographically diversified. We were already the most diversified MFI, and we continue to be so even as a small finance bank. And the business traction in microfinance as well as other businesses is continuing to grow steadily. Earlier in the previous quarters, we were conservative in terms of our disbursement on microfinance wherever we saw some kind of stress in some of the states or some of the branches and districts. But slowly that position, which was the impact of demonetization, actually we have seen that impact more or less fade out, and right now our disbursements continue to grow stronger quarter by quarter.
All right, ma'am. So then would you maintain microfinance as 95% of your loan book going ahead, or is there any plan to reduce that number?
Yeah, so as we had given a guidance and also indicated in our 5-year plan that slowly the MSE business and the affordable housing business, which are our two growth segments, they are bound to grow over the next 3 to 5 years, and slowly as their ticket sizes are quite large, they will contribute more and more in terms of their share in portfolio. Microfinance will continue robustly not only in our current branches but also in the unbanked rural centers which are opening. As you are aware, as an SFB, we will be opening 1/4 of our total number of branches in the unbanked rural centers, and this aligns also with our mission to continue to serve the unserved and the underserved. So overall, the microfinance business will continue to grow and have a good traction. At the same time, our focused growth on the affordable housing and MSE is also set to grow in the next 3 to 5 years.
All right, ma'am. Just a word then on asset quality. You've seen it come down steadily over the last 3 quarters. Of course, once again, if we compare it year on year, quite a bit of pressure. It's at about 4%. Do you expect that you will see further reduction in terms of GNPAs? I understand your net NPAs have come off quite well, but GNPAs, will they remain around this 4% level, or do you expect that you'll see more reduction going ahead?
Yeah, so this GNP, as you see in this financial year, is completely impact of demon and the credit costs which we have taken into our books. So we do expect the GNPA to come down. We could see it coming anywhere spanning between 3.5 to 3.8 in the coming quarter. But this is completely on the impact of the stressed assets. If you would look at credit costs independently, say for the next financial year, since our portfolio now, almost 78 to 80% of our portfolio is the portfolio created from new disbursements from January 2017, and that has an excellent collection efficiency, you see, of 99.7%. So overall, the portfolio which has been formed from January 2017 continues to have an excellent asset quality and a collection efficiency of 99.7%. With that, you could see almost a credit cost coming to nominal levels, and it could well be around this 1% or sub 1% range in the next financial year.
All right, ma'am. And I also want to talk about the cost of borrowing. It's come down to 9.7% versus about 10% last quarter. This is in spite of the cost of money in the market really becoming more expensive. What is your outlook on this front? You posted a treasury loss if you look at the third quarter. Of course, this was expected with the sort of movements we've been seeing in the bond yields. But what is your strategy and what is the outlook that you really have for the market?
Okay, so as far as Ujjivan is concerned, our average cost of borrowing has been steadily coming down quarter on quarter. The reason being that all our high cost legacy loans are being repaid and most of them have been prepaid, and also the substitute cost of funding from other sources has been much cheaper. So we are raising money through deposits. We have also got the certificate of deposits as a part of the wholesale deposits that we are borrowing, and those come at fairly cheaper costs than the legacy borrowing costs that we had. So we'll see this trend continue. So we were about 9.5% just in the last quarter, and that has come down to 9.3 right now, and we could see a further reduction going down in the next quarter and a couple of quarters. Having said that, once you see the interest rates hardening up in the market, one has to see what will be the overall impact and what's the kind of leverage we will have, both in terms of increase in interest rates and the kind of lending rates that we could foresee in the near future. So there will be some amount of balancing, but overall we still have some kind of a leverage and a benefit in terms of our cost of funds coming down.
All right, ma'am, and just a last word in terms of margins. What is your outlook now? Do you expect to maintain it at this level, or can we, with this kind of treasury performance, is there any scope to see any sort of margin expansion going ahead?
Okay, as of now, we would keep a conservative outlook, but the position is quite good as we improved, in the last few quarters, and our NIIs and NIMs have shown a continuous improvement as you see quarter on quarter. And today we have the banking NIM at about 11.08%. We would like to say that probably we should be able to maintain the same.
All right, should be able to maintain margins going ahead. Ma'am, thanks so much for joining and always appreciate having you on. That's Sudha Suresh, the MD and CEO of Ujjivan Financial, really giving us a fine print into the quarter gone by. But let's put the focus now on Lupin because we're expecting their third quarter numbers out soon. Lower sales and other income, that's really what we're expecting will contribute